Are you tired of grinding all year only to send a fat check to the IRS and wonder where it all went? If you're running your business through an LLC and still paying self-employment tax on every dollar, missing deductions, or not taking advantage of legit tax strategies, you're probably overpaying by a lot. Today, I'm going to break down how LLC owners can stop leaving money on the table and legally lower their tax bill. These are strategies the wealthy use every day, and now you can too. 1. LLC is a legal structure, not a tax strategy. Let's start with the basics. An LLC is a legal entity. That means it gives you liability protection, but the IRS doesn't automatically treat it as a separate tax entity. By default, a single-member LLC is taxed like a sole proprietorship. A multi-member LLC is taxed like a partnership. That means all profits flow through to your personal tax return. And here's the kicker. You pay self-employment tax on that profit, plus regular income tax. Self-employment tax in the U.S. is 15.3%. That's Social Security and Medicare. It adds up quickly. Let's say your LLC makes $100,000 net profit. $1,500 goes straight to self-employment tax. Then you pay income tax on top of that. Your real tax bill could easily exceed $30,000 before you even realize it. 2. Elect S-corporation status. One of the biggest tax-saving moves you can make is electing to have your LLC taxed as an S-corporation. Here's why it works. With an S-corp, you can pay yourself a reasonable salary. Then take the remaining profit as distributions, which are not subject to self-employment tax. Let's go back to that $100,000 example. You decide to pay yourself a $50,000 salary. That $50K is taxed like normal wages, including payroll tax. The other $50K? It's considered a distribution and not hit with self-employment tax. Your savings? Roughly $7,500 in self-employment tax every year. But, and this is important, your salary must be reasonable in the eyes of the IRS. That means no paying yourself $10,000 and calling the rest a distribution. The IRS watches that closely. So be smart, be fair, and document everything. 3. Know your deductions and track everything. Now that your structure is optimized, let's make sure you're not giving away more money by missing deductions. Everything that's ordinary and necessary for your business is deductible. Here's a list of common, often overlooked write-offs. Home office, calculated by square footage or actual expenses. Business mileage or actual vehicle expenses. Internet and cell phone, business portion. Software subscriptions like Zoom, Canva, QuickBooks. Marketing. Ads, designers, social media tools. Professional fees. Legal, accounting, consulting. Business meals and travel. 50 to 100% deductible. If you're not tracking these in real time, you're losing money. Use accounting software like QuickBooks, Xero, or even mobile apps like Keeper or Expensify. And remember, no receipt, no deduction. The IRS is not a fan of guesswork. 4. Hire your kids. Yes, legally. One of the most powerful and most underused strategies is hiring your own children. Let's say your 13-year-old helps with packaging, filing, photography, or cleaning the office. You can pay them a reasonable wage from your business. Why this matters? Their income is tax deductible to your business. If they make under $14,600, the 2024 standard deduction, they pay zero in federal income tax. If you're a sole prop or a single-member LLC, not taxed as an S-corp, you don't have to withhold Social Security or Medicare. That's money you used to pay taxes on, now staying in the family. Imagine paying your child $12,000 a year. You write off $12,000, reduce your taxable income, and your child pays zero tax. It's a legal income shift that builds generational wealth. Just keep it legit. Track hours, pay market wages, and file a W-2 if necessary. 5. Use retirement plans to your advantage. Another massive win? Setting up the right retirement plan. LLC owners often miss out on this because they think it's just for W-2 employees, but you can deduct a lot with the right structure. Top 2 picks. Solo 401k. Contribute up to $69,000 in 2024 if you're over 50 SEP IRA. Contribute up to 25% of compensation, capped at $69,000. Every dollar you contribute reduces your taxable income, and you're building wealth for your future self. That's a smart 2-for-1. You can even contribute as both employer and employee in a solo 401k if you're self-employed. That's how high-income LLC owners defer tens of thousands in taxes each year. 6. Use strategic timing. Prepay and accelerate deductions. Here's a move used by big business and smart small businesses alike. Accelerate deductions before year-end. This means prepay January rent in December. Stock up on office supplies, inventory, or software. Buy that new laptop, camera, or business equipment before year-end. Pay contractors early to take the deduction now. All of these reduce your taxable income in this calendar year, which can lower your final tax bill significantly. This is especially powerful if you're having a strong year and want to control how much tax you owe in April. Also, don't forget about Section 179. You can deduct the full cost of qualifying equipment in the year you place it in service, rather than depreciating over time. 7. Don't forget about health insurance and HSAs. If you're paying for your own health insurance, that's potentially fully deductible, even if you don't itemize. Also, setting up a health savings account, HSA, is one of the last remaining triple tax-free strategies. Contributions are tax-deductible. Growth is tax-free. Withdrawals are tax-free if used for qualified expenses. In 2024, you can contribute up to $3,850 for individuals and $7,750 for families. And if you're over 55, you get an extra $1,000. Let's be real. Most LLC owners are overpaying in taxes because they never got the education or guidance. But now you know better and you can do better. Here's the recap. LLC is a legal structure. Choose the right tax status. Elect S-corp to potentially save thousands in self-employment tax. Track and maximize every legitimate deduction. Hire your kids and keep money in the family. Max out your retirement plans. Prepay and time your expenses strategically. Use HSAs and self-employed health insurance to your advantage. If this helped you, smash that like button and subscribe to Clear Finance CPA. We drop weekly videos to help small business owners, freelancers, and creatives grow wealth the smart way.